Success consists of getting up just one more time than you fall. Oliver Goldsmith. Do you notice the consistency of all the advice from these great people throughout history? It is to persevere, to keep trying. You only fail when you quit. So 10 to 15 minutes a day, that is all we ask. Let's jump into these charts. Stocks are mixed. Bonds and gold are up. Bitcoin is down. How are we starting the week off? With the S&P 500 up 0.25%. But as we look at the Heiken Ashi candlesticks, we can see that things are down. We see that the price percent oscillator is pulling away from the red signal line. Derivative oscillator has gone negative. Red down candle forming, showing us the average pace of price movement is down with a wick on the bottom. Let's look at the two-day chart. Now again, the last two-day candle ended Thursday, so this latest one represents Friday and Monday. It is complete. And again, we had that two-day recross going down with the jumping in point. And of course, those of you who decided to short the S&P, so far, everything is looking okay until we get here. We're going to look at the shortest of all our charts, which is the half day. And the only thing we see happening is again, not going down. The angle is slowing down a little bit. Derivative oscillators flat. Price percent oscillators lost a little bit of that drop. But again, we can see where the average pace is continuing down. Let's tighten this up and redraw our trend line on the half day. So keep an eye. In particular, since you're in a two-day recross on that two-day, still looking strong, you can get, and in fact, the reason I'm talking about all the charts all the time is that's what the special training is for all of our subscribers. And of course, you can subscribe for free at chartingwealth.com. We got a great training. Put a training in there for you every single day. Use all the charts all the time to stay out of trouble. So again, you can get a little heads up. You don't want to be surprised. The best way to not be surprised is to follow all the charts all the time. Pay attention to what's happening. And of course, what makes you do that? Your daily market worksheet makes you do that. You put down what's happening on all three time periods: the weekly, the two-day, and the half-day. And by seeing that, visually noting it down, I'm going to put at the end of today's training, I'm going to put a video in there for you on how to fill out the daily market worksheet. It's so important. I talk about it all the time. You want to supercharge your training? That is the way to do it. That's where we are on the S&P. We're going to now go to the Qs. Qs down a little bit, 0.07%. And what do we see happening on that weekly chart? Laminated. The price percent oscillator, if you look over to the left-hand side, if I move my cursor, see it goes away. But if you look on the left-hand side under that first horizontal line, you'll see PPO and EAV8. That is your price percent oscillator and your exponential average 8 period. It's your exponential moving average 8 period. That is our red signal line. What's that showing you? Showing you laminated. The price percent oscillator and the red signal line are on top of each other. How have we started the week off? With a red spinning top, almost a doji. Derivative oscillator still positive, losing momentum. Price percent oscillator laminated two-day has crossed over. So if anyone was in any kind of trade still on the Qs, that is almost always your last signal. Sometimes the idiot signal, sometimes not, but that is the last signal for getting out. We now have a confirmed two-day crossover going down. It's not a recross because it's going in the opposite direction of the weekly. It's just a crossover going down. We'll change the line just so visually you can see that immediately. Like we said, derivative oscillator still positive, but going down. Price percent oscillators crossed over, and we see three strong down candles on the half-day chart representing a day and a half of strong down movement. Derivative oscillator gaining momentum, price percent oscillator heading down. That's where we are on the Qs. So we're out of that Qs trade if you were still in one. Now let's move on to 20-year bonds. What do we see there? Up for the day, 0.61%, starting the week off with the first green open box candle in 3 weeks. Price percent oscillator is positive and flat. Derivative oscillator is not negative yet, but it has just continued to descend since it peaked back on the week ending the 23rd of July. And what it's really done is it's never reached that high since then. It has just slid sideways and devolved. So that is where we are on the weekly. We go to the 2-day. Where is it? Well, we see the latest 2-day candle is a green up candle, little wick on the bottom, nice wick on top. Price percent oscillators negative and flat. Derivative oscillator negative, losing downward momentum. 2-day, going from the 2-day to the half-day, what do we see there? We see this half-day up in the morning, about the same in the afternoon. Price percent oscillator spiking up, derivative oscillator moving up. So keep our eye on bonds, see what they do. What are they going to do? There's really one of two possibilities. The weekly will cross over going down, then we'd have a weekly vertical crossover going down, or the 2-day is going to cross over going up, and we'll have a 2-day recross. When that happens, we'll let you know. Until then, keep your powder dry on bonds. What's up with gold? Gold up for the day 0.33%. And again, what is gold doing to us? Well, we can see that the price percent oscillator, and again, everything is negative, so it is reversed. So we see that the price percent oscillator is negative 0.28%, and we see that the exponential moving average line is negative 0.25. So we are crossing over, going down so far this week, after we had that weekly vertical crossover that at this point may be failing us. We're going to take a look at the 2-day in just a minute. We do have a red down candle forming after a red spinning top the week before. Derivative oscillators trying to hold positive. You know, as the week develops, remember, we don't call a crossover until it happens, but sure looks like it's trying to happen, trying to cross over. It was laminated at the end of last week, if you remember, at 0.25. Haven't crossed over going down on the 2-day yet. We can see that we've not reached a lower low in this latest 2-day candle, but it is a red down candle. Is gold going to sort of bottom out, pop up before the end of the week? Don't know that that's going to happen. But it ain't looking good so far after that weekly vertical crossover. Look at now again, this is the only place for a little bit of hope, is on this half day. We can see where gold reached its bottom back on Wednesday the 8th, and then has sort of slid sideways since then. The price percent oscillator is negative and flat. Derivative oscillator continuing to lose downward momentum. Remember, the derivative oscillator is a triple smooth version of the relative strength index. It is a leading indicator. Is it going to lead us out of this mess? Don't know. We just got to watch, wait, and see where things go. Has gold reached a bottom and it's just going to sort of gain some energy and pop up, or has it just reached a floor for right now, a stair step that's about to roll over and go down again? Don't know. We'll wait. We'll see. We'll let these charts lead us. It's where we are on our four big charts rather. Let's go to Bitcoin. What do we see on Bitcoin on the weekly? Starting the week off down 2.56%. We can see where Bitcoin had topped, and this is a red down candle. Red down candle on Bitcoin tends to mean big down moves on Bitcoin. When that starts, if you look back in time on our charts, you can see where the big drop last time started there. Price percent oscillator still positive, heading down. Derivative oscillator moving down. Now, what do we have that would take you out of a Bitcoin trade? Well, we have a 2-day crossover going down. Again, that's the fool's message. When that crosses over going down, and look at that, the derivative oscillator flipped over at the same time. Those typically are the strongest types of crossovers. When the price percent oscillator and the derivative oscillator flip at the same time, that's usually, and again on the 2-day chart, that's telling you get the hell out. Now, you can look back in the past and see where that could have fooled you a time or two, but again, nice good sized down candle, significant weakening in your weekly also, something to pay attention to. And of course, what's up with that half day, 2 days of strong down movement with a crossover back on the beginning of that 2 days of down movement, which would have been last Friday. So pay attention. If you want to learn how to trade Bitcoin, then you need to start practice trading and charting Bitcoin. Doesn't cost you anything to do it. That's where we are, folks. We so appreciate you being with us. We appreciate all of our Patreon supporters. God bless you guys. All the best from the whole team at Charting Wealth World Headquarters.